The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Where the wealthy choose to invest says a lot about the state of the global economy, and right now those choices are shifting. High net worth and ultra-high net worth individuals are reevaluating their portfolios amid inflationary pressures, rising interest rates, geopolitical instability, and a rebalancing of global power centers. So where exactly is capital flowing in 2025? Are bonds, value plays, or private markets taking precedence? Well, to find out more, joining me now is Jeremy Tan, who is the CEO of Tiger Fund Management. Jeremy, welcome to the show.
Thank you so much, Hongbin.
Thank you so much for joining us. Well, Jeremy, as global uncertainty continues to shape capital markets, where are ultra-high net worth individuals and institutional investors increasingly allocating their capital? And how has this influenced demand for more bespoke portfolio management?
I think what we are seeing so far is that there's actually a definitive shift towards greater customization and of their discretionary wealth management strategies. I think the traditional 60-40 asset allocation is right now actually paving way to more sophisticated and multi-asset strategies that may be used to actually navigate today's complex market environment. I think in this regard, I think clients today are not only seeking absolute return, but also looking from the point of view of a risk-adjusted return. So therefore, I think they are actually looking for more other multi-asset classes to actually diversify away their risk, to get actually uncorrelated sources of return to reduce the risk of their portfolio. And we actually see a growing preference for this kind of tailored solutions and also stronger demand for this discretionary portfolio management service that Tiger Fund Management actually provides. I think particularly clients actually value institutional grade strategies with actually flexibility and actually more responsive to their individual needs. So I think on Tiger Fund Management's, I would say products, multi-asset discretionary products, that actually spans the entire full risk spectrum, all the way from the conservative capital preservation strategies to growth-oriented approaches to the discretionary portfolios. And this year to date, we not only on the discretionary portfolio management, we actually also launched multiple funds on our platform that's actually actively managed by Tiger Fund Management that actually serves as building blocks for their bespoke portfolio management. One good example is the Tiger Yuan USD Liquidity Fund. This is actually an institutional grade liquidity and risk managed fund that actually helps to provide really stable returns above that of the US dollar short-term deposits. And this is very compelling solution for our conservative investors, as well as on perhaps a more alternative front, the Tiger Gold Up Private Credit Fund. I think we actually launched that a couple months ago to actually allow investors to access alternative investments that's actually very hot in the market right now to enhance their use. And this asset classes used to be actually meant for institutional investors and also endowments.
All right, very interesting. Well, have you observed a shift in interest from traditional assets towards more, structured, multi-asset or alternative investment strategies amongst your high net worth clients?
Yes, I think definitely, as mentioned, the traditional 40-60 kind of asset allocation towards equities and bonds are really, adjusting, especially post-COVID. I think while bonds and equity actually remain the core exposure for most investors, but I think we do see a lot more demand coming out from structured products, multi-asset products that actually deliver a more risk-adjusted returns in an all-weather market versus just traditional asset allocation, 40-60 to bond and equities. I think notably for high net worth investors, they are also looking at enhanced use solutions that can actually weather the market volatility and also a bit preserving their downside protection. So our expertise at Tiger Fund Management here is that we are actually curating structured strategies across multi-asset classes to actually meet the evolving needs of our high net worth individual clients. And this shift is pronounced in Asia. I think we are seeing that investors are becoming more sophisticated in terms of their understanding of our products, and their objectives are also changing as well. And what we are seeing as amongst Asian high net worth investors is that not only are they adopting more of this kind of strategies beyond the traditional asset allocation strategies, but also towards more alternatives as well.
Okay. Then which sectors are seeing the most inflows from wealthy investors right now? Is it tech, energy, healthcare, or are there others?
Well, if you look at, I think the primary basis of our investment philosophy, I think we definitely want to look at companies that have strong fundamentals, and earnings quality is extremely important, whether be it in all our strategies, we make sure that these are actually covered before implementing the investments into the client's portfolio. And we also like to identify companies that actually have a backdrop of secular trends that are favored by the market, and can name about 3 trends that are actually up there in terms of what wealthy investors are looking at right now in terms of technology, especially with regards to the AI-linked investment teams. I think we have seen a lot of monetization angle regards to stocks that are listed in the US. They are having a very strong earnings growth that are above market right now. However, I think that investors are becoming also more discerning, given that not all of these AI names will turn out to be winners. They are also focusing more on the earnings growth of these AI-related companies, as well as capital efficiency in terms of whether they generate that longer return on investment. Another point is that in terms of sector allocation would be healthcare. I think we do see a burgeoning biotech market that is actually growing to the tune of about 5 trillion by 2034. And there has been consistent and steady asset allocation by our team towards this sector. I think lifestyle disease such as obesity are becoming a problem, especially in developed economies, and this will continue to pay well for this subsector, as well as biological drugs, especially within the oncology space. I think there's a lot of potential as well. Similarly, on the third sector that is actually well liked by investors would be perhaps the global energy investment team. There is a lot of talks about energy transition towards clean technology, especially the smart grids, the renewables. I think we are seeing twice the amount of investments and capital that's actually being deployed into this sector versus the traditional fossil fuels. And in terms of the overall geographic asset allocation, we are continuing to see fund flows into China equities, especially this year. I think the worst has been behind us in the China equity space. And for the US, even though there is a lot of noise in the market, especially post-Liberation Day. Valuation actually sank. But I think that right now, even though valuation has recovered, I think that there is still diamonds in the rough amongst U.S. equities despite current U.S. valuations.
Well, with market cycles becoming, less predictable, how are sophisticated investors balancing growth with capital preservation? And what role does superior risk management play in achieving consistent risk-adjusted returns?
Well, I think that sophisticated investors do recognize that traditional diversification isn't really enough in this kind of investment era that we are seeing a lot of uncertainty in terms of trade wars and even actual wars that's actually occurring in the Middle East and also Russia and Ukraine. I think there is a lot of need in terms of superior risk management. I think this will become a primary differentiator into driving better risk-adjusted returns for any asset manager. So I think in terms of volatility mitigation, Tiger Fund Management, I think we actually differentiate ourselves in terms of looking at volatility in the way that we want to try to reduce this volatility by looking at uncorrelated sources of return, firstly, and secondly, looking at stocks from an intrinsic value standpoint, and also conducting dynamic hedging of the portfolio. I think as the asset management arm of Tiger Brokers, I think we looking at really our disciplined investment framework across 3 pillars, looking at rigorous macro and fundamental research on the securities that we are actually investing in, having that quantitative risk modeling to reduce and even signal out some of the risk factors before they occur, and also dynamic portfolio construction. And I think going beyond just asset class diversification, we really want to try to diversify also on the risk factors, the market regimes, and also correlated environments to reduce the overall risk of our portfolio. And our proprietary models actually help to flag out some of these relationships before they start to break down whenever there is some regime change that we are seeing this year. Especially this year, I think we are one of the first asset managers to actually signal to our clients that of a major pullback, especially during Liberation Day in April in the US markets, and the rise of the East, especially we are seeing that China revaluation or re-rating this year. And some of the key themes are actually reflected in our technology and thematic DPMs that actually offer uncorrelated sources of returns. And thanks to these DPM products, I think that we have adopted this very rigorous research upon. They have actually shown to deliver lower downside risk, especially in April, and that actually helped to mitigate that drawdown. That's what we have seen post-Liberation Day, to actually deliver very consistent and risk-adjusted outcomes for our clients.
Well, on that note then, Jeremy, how are wealthy investors today making use of, data and quantitative insights in their decision making? And how is Tiger Fund Management leveraging its proprietary models to meet these, evolving expectations?
Yes, we understand that today's world, wealthy clients are increasingly very sophisticated and actually data-driven. So I think in terms of our investment strategies, they are not only actually backed by conviction, but also based on our robust quantitative analytics that actually looks at behavioral patterns in the market and also from the standpoint of fundamental and macroeconomic indicators. At Tiger Fund Management, we actually integrate some of these insights to our DPM strategies, and this help to identify some of these inflection points and align the risk to our clients' risk profile returns. And in parallel, we also recognize that many institutional companies actually face increasing analytical expectations from clients. And from Tiger Fund Management, we actually utilizes our in-house platform, which is called Trading Fund, which is our proprietary turnkey asset management platform. And this platform actually helped to equip us with AI-powered portfolio analytics, real-time portfolio reporting, and also this will help us surface really timely insights back to our clients, especially with current market dynamics is actually very volatile. And this actually helps our portfolio managers to engage their clients with greater relevance, clarity, and also speed. And using this CRM tool, customer relationship management tool, that actually integrates our AI automation, that actually helps to streamline our reporting process and actually also enhance the decision-making process at the PM level. So for us, I think that it's really important to actually have this tool in place so that we can really generate precise, customized, consolidated reports across multiple portfolios to actually streamline the whole entire process. And that actually allows us to focus more back to our clients' communication and review of the portfolio, and also deliver perhaps a better relationship that's actually built on this timely execution of that portfolio review.
Well, then how do you see investor appetite evolving when it comes to customizable structured products, and what considerations are important when crafting these solutions?
Well, I think there is definitely a lot more greater personalization in terms of our needs for the portfolio construction of our high net worth clients. In fact, also in terms of the structured solutions that actually reflects their financial and personal goals. At Tiger Fund Management, for the customized structured products, we have actually fully integrated into our discretionary portfolio strategies that actually spans across equity, balance, and fixed income mandates that's actually tailored to their individual risk appetite, their income needs, and also their long-term investment objectives. So in terms of clients, I think a lot of them, they are actually seeking this discretionary portfolio to actually cover their investment objective. So this is what we have been doing to customize our structured products to reflect their investment objectives. And at the broader group level at Tiger Brokers, the structured product offerings is actually being used that are actually using leverage technology so that we can actually look at some of these structured products on a real-time level, comparing them to get the best quotes for our clients in terms of coupons, the key parameters of the notes, which is very important. And this actually serves as all the toolkits for us at Tiger Fund Management to implement to the portfolio of our clients, whether be it is a capital protected, enhancing their yield, or clients that are actually seeking a thematic exposure. And all these are actually all customizable.
Great. Well, before we let you go here, Jeremy, with Tiger Fund Management having launched multiple strategies across the risk spectrum since inception, what has been the most consistent ask from your clients, and how do you foresee wealth management evolving in the next, say, 12 to 18 months?
Well, I think the portfolios that we are actually building across our discretionary bespoke mandates, I think they are actually catered towards the differing risk appetites of our investors. I think we do see a growing interest, particularly even beyond our equity balance and fixed income mandates towards our thematic DPMs. I think investors want to capitalize on certain secular trends that are actually occurring in the market, especially in the AI, biotech, and clean technology, clean energy space as well. So I think what we are seeing is that that's remaining consistent is that investors are actually demanding for really a very tailored set of approach, a high-touch set of approach in terms of their investment strategies. And at our level, at Tiger Fund Management, I think we aim to really do that not only by our team, but also towards using our technology so that we can actually deliver this product at a bigger scale to our investors. And we are really to support this shift to cater towards the newer generation of investors, not only from the deep investment expertise that we have, but also on the technology front. And year to date, we are seeing at the organization level, the wealth penetration level reaching 22%, especially amongst our newly funded clients, meaning to say that 1 in every 5 Tiger clients are actually looking to invest in one wealth management product.
Very interesting. Some great insights from you there. Thank you so much, Jeremy, for joining me today.
Thank you so much, Hongbin.
Thank you. That was Jeremy Tan, CEO of Tiger Fund Management. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.